Hello, I'm Josh Mee with Gaspar Insurance Services, and I'm going to talk to you a little bit today about residential earthquake insurance. One of the most common questions we get asked as insurance agents is how much is earthquake insurance, and is it covered by my homeowner's insurance policy? So I wanted to explain a little bit about how residential earthquake coverage works. And so today I'm going to give you some live examples. So first of all, earthquake insurance is not automatically part of your homeowner's insurance policy. In fact, all typical homeowners insurance policies actually exclude earth movement or earthquake coverage. So it is important to consider that we live in earthquake country to perhaps include an earthquake insurance policy to protect your home, your biggest asset. So let's talk a little bit about how an actual policy works. An earthquake insurance policy is structured very similar to a homeowner's insurance policy in that you have coverage on your dwelling, which would be the main house. You have the ability to purchase a policy that's going to include coverage for other structures. And other structures would be things that are not attached to your main house, maybe a detached garage, or perhaps a swimming pool or a guest house. You have the ability to include coverage for personal property, and personal property would be all of your possessions inside of your home. You also have the ability to include coverage for loss of use. Now, loss of use would be characterized as the inability to use your house, meaning you're now going to have to go rent something else while your home is being fixed and repaired. The loss of use coverage is designed to pay that cost of you having to live somewhere else while your home is being fixed. And then for condos, you have the ability to include loss assessment coverage, and that's actually kind of important. If you live in a condo building, especially if the condo structure has an earthquake insurance policy, if there is a substantial earthquake, that earthquake insurance policy that covers the condo structure that's typically purchased by the homeowners association, that policy is going to have a rather large deductible. And what happens is each unit owner inside the condo gets assessed their share of the deductible. The loss assessment coverage is designed to cover your share of the deductible that would be assessed from that earthquake policy. So these are the typical coverages you would find in your earthquake insurance policy, and I want to just run through an example of how a policy would come into play. So let's assume that you had a home that cost about $300,000 to rebuild, so that's the estimated replacement cost of the house. You would then buy an earthquake insurance policy that's going to cover the house for $300,000. And perhaps you've discussed with ourselves or your insurance agent that you feel comfortable with perhaps a 10% deductible. So in this example, you'd have a $300,000 coverage limit. Your deductible for the dwelling would be $30,000, so a 10% deductible. So there's a common question. If I have an earthquake, and let's say my damage is only $50,000, is my deductible 10% of $50,000? The answer is actually no. The deductible is the percentage of the dwelling limit. So if you have $50,000 in damage, your deductible is still $30,000, you'd be entitled to recoup $20,000 towards the cost of your repairs. So it's just a key point, kind of important to know there. Then you have the opportunity with this particular policy, they've included about 10% towards detached structures. Maybe this house has an in-ground swimming pool. It's really their only other structure on the property. We design this policy in such a way where we are able to get coverage on swimming pools. So in this case, you'd have $30,000 in coverage available for your detached structures, and that particular line of coverage would be subject again to a 10% deductible, so in this case $3,000. And we move on, we have your personal property inside your home you've calculated to be about $150,000. And it's true, in the event of an earthquake you may not lose everything. You know, a lot of your tables and chairs may just shuffle around, but you might not sustain damage to them. Or maybe your clothing is just in your closet, nothing really happens to that. But the bigger concern is if your house is red tagged and you're just not allowed to go inside to recover any of these things, you could end up having a substantial personal property loss. In which case, you would have $150,000 in coverage for your personal property here, again subject to a 10% deductible, so a $15,000 deductible. And then we could move on to the loss of use coverage. Now, in my opinion, I think the loss of use coverage is going to be one of the most important coverages in the event of an earthquake. The reason for that is that there is a big enough earthquake that's going to do such substantial damage to your house, in which case your earthquake policy is actually going to need to come into play. The odds are that same amount of damage has happened to a lot of other people in the community, and a lot of people are going to be looking for alternate places to live while they're trying to get their homes repaired. Ultimately, that's going to end up driving up the cost of rents, so it's going to be more expensive to rent a typical home that would be similar in size and nature to your own. I think it's important to have a high loss of use coverage there so that you can really protect yourself from those increased rental costs in the event of a substantial earthquake. So in this case, we structured the policy to have $50,000 in coverage for loss of use. Again, it would be subject to a $5,000 deductible. So this is a pretty basic example here, but this type of a policy would, run probably about $1,100 a year, just depending on a year the property was originally built. Now, the premiums could certainly vary. The older your home is, the less built to current codes it is, the more expensive your policy is going to be. And then it works the other way around. The newer your home is, the more current it is on earthquake codes, the less expensive your policy is going to be. And there are certainly many different earthquake insurance options available. There's quite a few companies that are offering earthquake insurance coverage at this time. And a lot of them are starting to compete, and the prices are starting to come down just because it's been so long since we've had had a substantial earthquake. So I invite you to give us a call. We're happy to discuss any of your earthquake insurance needs here and review the different options available to you, and we can structure and tailor an earthquake policy to suit you and your family and your lifestyle. So again, I'm Josh Mee with Gaspar Insurance. Thank you.